Hello, my YouTube friends. So, is now a good time to sell your stocks out and wait until that big collapse comes in order to buy it back cheaper? Stick around for today's video and we'll talk about that and a lot more. Good morning. My name is Adam Kahn. Hi, Winston. And this is Investing with Adam K. Whoa, wait, what happened to the rational investor? Well, I changed the handle, I guess is what you would call it, and the name of the channel a bit. When you search for the rational investor, which I still think of myself as a rational investor, um, a lot of other things come up and not my information. So I'm hoping with changing the name to Investing with Adam K, people who want to actually find my information can find it a little bit easier. That being said, if you haven't already, do me a favor and hit that subscribe button, smash the like button, make some comments, share the information with friends or whoever you'd like. As you guys know, that helps YouTube's algorithm. And if you're enjoying the content, I really appreciate that. It's been super cool to watch the channel grow. It's kind of cool watching more comments and everything else. I think you see I do my best to answer everybody. If I don't answer, it's basically either that I just didn't see the message, and when I get to my computer, I do it then because on the phone sometimes it doesn't always come up, or that I think you're a scam artist and you're touting some bad financial advice to the people who are watching the channel. So be careful of that as well if you see some things that don't look right. So is now the right time to sell everything and wait for the pullback and buy it back cheaper? My basic answer is no. And now, this is not financial advice. It never is. Keep in mind, I'm just a guy on YouTube. I'm sharing the information that's worked for me over the years. I've been investing for myself for a long time. I started when I was around, I don't know, about 22 years old and started working and having an income. And now I'm 52, so for about 30 years, and I've managed my own money. And what I find is that over time, things tend to go up. Now, you have to make your own financial decisions. You need to do your own research. I would seek guidance as well and maybe get a advisor and not the ones advertised by the commenters of making millions of dollars in a month or whatever it is they advertise. But what I find is if you give things time, they tend to go up in value. Now, of course, that's not always the case, but if you look back over history, maybe it is just the dollar becoming worth less money and things go up in accordance of that. But things tend to go up in value, whether that's houses, whether that's in collectibles. Some people like uh, cards like baseball cards and Pokemon and whatever else. Some people like artwork. Some people like all sorts of things. Comic books was a great investment as well. Even video games are now becoming collectibles and things from the past. I think it'd be pretty cool to own the original iPhone. I just try not to get into things I don't know enough about because what I find happens is that's when you make bad decisions. If you invest in the things you know about, you tend to do really well in it. I don't want to go buy the original iPhone, buy the wrong one, invest in the one that I just got overpaid for because I didn't know what I was doing. But I still think that those things become a collectible, whatever it is. And the reason I don't think you sell now is I think timing the market is really difficult. Time in and time out, people try to time the market. Day trading generally doesn't work. It works for maybe 2 or 3% of the people. And don't get me wrong, I still do it. So even when I'm telling you guys not to do it, I'm half talking to myself half the time. It's actually why I've set up my accounts the way I have, which I've talked about in other videos. Part of why I have the bulk of my investment somewhere where I don't have access to it is to help me from being me. You know, I, I was a commodities trader in Chicago where I traded currency futures. Well, I'm in and out of the market many, many, many times a day because the more often I can buy and sell, the more I can make as a living. Well, that was my job. The thing that made it difficult is I saw how that worked, and as my job, like it's hard to just leave money as an investment when day in and day out I'm getting in and getting out and getting in and then getting out. But that's much different than investing. What I've learned from the investing is where I've done the best are the things that I've just put into great companies and let it sit for a long time. Same with real estate. The shorter time that I owned something, generally I didn't do as well as if I just owned it for a long time for multiple reasons. One is the longer you own it, the larger percentage of principal you're paying off of a mortgage, on top of the fact that it gives it more time to really grow in value. If you own something for 3 to 5 years in the real estate world versus you own for 10, 20, or 30, it's that maturity of time that allows the appreciation to continue to grow and the more principal you're paying if you have a mortgage. My guess is similarly, if you were flipping properties, I would think that almost is a job, and I would do it as often as possible to make what I was making and not worry about the growth over 20 or 30 years. But those are two separate things, and it's hard to do one as you're living and then separate the investment as a different type of way of increasing your wealth. I also think when things are scary, that's often the best time to be investing. And right now, we have what's going on in the Middle East with Israel and Iran now expanding, not just what's going on with Israel and Gaza. We have issues with inflation, and will the Fed even be able to cut rates where we thought they would be? We have issues with the Ukraine war still going on. Oil prices could likely go up. Inflation is running through everything, so we're all feeling it. Credit card debt is getting at the highest levels ever. We're beginning to see defaults in autos, and we're beginning to see defaults in housing, and all of these scary things going on. I think that makes it an attractive time to be investing. Now, again, maybe you don't try to time it, but my general goal with what I do on the channel, what I hope to do is I get people to start saving their money and putting away the best they can. The inflation makes it really tough, especially because you get used to living a certain lifestyle, and then all of a sudden the things you're used to getting become more and more expensive, and it gets harder to keep up. I talk to my son about always living below your means. I understand that that's not so simple to do. I don't want to say it so flippantly, like, oh my God, it's just easy and life should be simple for everybody. Because honestly, I feel really bad for the people who right now have the equivalent or close to minimum wage jobs, or people who are retired living off of their Social Security and fixed income when the inflation got so out of hand. The thing to keep in mind when the Fed talks about it, they're not talking about raising the rates to the point of causing deflation. So we have to get our mindset out of the space of prices going back to where they were. We have to get focused on them continuing to grow at a slower pace from where they are. Pretty crazy when I think about the cost of what it is to go out to lunch or dinner, or I look at the tickets to go to a show or a game, and I scratch my head thinking, who has the money to do that? But to be fair, when I look, the places are sold out and the restaurants are busy that are doing well. I see, just like people, the businesses are having a big divergence of those that seem to be succeeding and those that seem to be really struggling. I go into some restaurants, and there's nobody there and they seem to be having a tough time keeping up. And then I go into other ones and they're just busy as can be, and the prices are rather expensive. I mean, a friend and I went to lunch last week. We got two chicken sandwiches and something to share, and it was over $60 for the two of us. I mean, to me, that's just crazy. The interesting thing is the inflation seems to be stickier than the Fed was anticipating, making it more difficult for them to cut rates, which has caused the market to get a little bit nervous. I actually think the correction has more to do with what's going on with Israel and Iran, and if that tends to settle down a bit, I think it means the markets could go right back up. Now, of course, there's always risk that there could be a collapse, that the markets could go lower, and that's just a part of investing. But what you have to keep in mind is the best way that I see to invest is if and when that happens, you actually want to invest more money. If you own great companies and you want to invest in the stock market, the lower the price goes, in my opinion, the more attractive it becomes to buy more of it. I try to keep some money on the sidelines to buy things when they're out of favor, and maybe I'll do another video on it. But right now, one of the ones that I just put on was with Boeing. Now, this is a tough trade for me personally because, quite honestly, Boeing always seems to struggle. Something about their management, they seem to never get things really going the way it should be. They always just keep coming back down, getting in more trouble, doing things wrong. But I feel like they've been in the news enough, and the price right now is back to where it was during COVID. And some of the news isn't so terrible. The way that they're presenting it, as awful as it is. I mean, one of the things that they were talking about more recently was the CEO using their private jets for personal travel. Well, I get that that's not a wonderful thing, but it's hard to imagine that the CEO of Boeing isn't using their private jets for things like that. Maybe it's inappropriate. I'm not arguing the right or wrong, but I, I'm not real surprised, and I don't see how that would really hurt the stock all that much. I think there's been so much bad news that how much more terrible stuff could come out to keep driving the stock lower and lower? And maybe it does, but to me, similar to that was what was going on with Target when it was making the lows. And don't get me wrong, I started buying it too high. I originally was buying Target around $130 a share before it fell to 105 or whatever the low was. Now, I did buy more between 105 and 110 to add onto the position, but I'm hoping to be able to do similar with Boeing, and I'm hoping it isn't one of those things that just gets worse and worse and the company gets into bigger trouble. And keep in mind that can happen, and you have to understand the risks of anything you put on like that. At the same time, if you buy what you think are great companies and the stock price goes lower, I see that as an opportunity to buy more of that great company. There's some companies, even myself, that I think are fantastic companies that I would like to that I would like to own, but I feel like the prices are just too high that it's really hard for me to buy them and I don't own them. I mean, a great example is Costco. I think they're a great company, but when I look at the valuation versus the earnings, it's so hard for me to buy it up here. Now, I do recognize when I look at the number of Costco's that there are in the world, I still think there's a lot of potential for them to be able to continue to grow, especially internationally. And, certain places like when they open up a new Costco in China, they go nuts for the place and it's super crowded and they do a great business. At the same time, it's just hard for me to pay up in terms of their price to earning ratio and things like that. They seem rather pricey to me. Doesn't mean I don't think they're a great company, and at some point I would like to add them to my portfolio, which is kind of where I go with if things go down in price, it becomes more attractive. Even Apple, I recently added it back into my portfolio, and I think I'm overpaying for it. But I think they're a great company too. And if I overpay, well, I guess I hope that it still goes lower and it creates an opportunity where I can add on to it because I do think they're a great company that I want to be invested in as well. There's just so many people out there when I watch other YouTubers that think the world is so gloom and doom. And don't get me wrong, I like a lot of these guys and I like watching their videos. I really enjoy some of them, even though I disagree with the information, especially the real estate ones, which are so hard for me because I totally understand it. The prices have gone up a lot, the interest rates have gone up a lot, but inflation is inflation. And I also think talking somebody out of buying a home may not be the best idea. If they're financially in the right position and they can afford it, I don't really see it as a great value of telling somebody not to buy because renting makes more sense or because the market has to collapse or because, when you do the analysis of how much income people have versus the affordability, nobody knows what is going to happen in any markets. So even when I talk about it and I say I think it's a great time to buy, it's not necessarily because I just think things are going to go up and up and up tomorrow. It's that I don't think it's a great idea to talk anybody out of doing any financial decision. And I think owning a home is a really wonderful thing, especially if you have a family and you don't plan on moving, and even the pride of ownership. Here, I'm going to point to see that tree right there. That's one of the things we put in recently. It's a fig tree. And then off the screen where you can't see it, we put in an orange one and an Asian pear and a couple other things. If we were just renting, I don't see us beautifying our home that way. This is because it's our home and we really like it. So, absolutely, if it was a straight math proposition, maybe I would be renting. I don't know. I would have concerns that the rents could continue to go higher as well. Inflation is inflation, just like a carton of eggs going higher. So does rent, so does the cost of buying a home, so do all sorts of things. Now, again, I think it's really rough on people if you're not already owning a home, that it has become less affordable. But I think if we go out 20 years, odds are it will be less affordable than where it is today. Maybe over the next 2 or 3 years, you'll see a correction, maybe not. And that's kind of why I say the people giving that advice that are constantly so negative on the real estate, that talk about why a collapse is coming, maybe you're right, maybe you're wrong. The interesting thing is, data points always sound great in terms of showing that prices are going to go lower on things. And when I've looked at whether it's equities or real estate or anything else, and the reason they go up in value is usually, not great data points. It's usually just this, I don't know, things tend to go up. And I think that really equates to mainly supply and demand. As things get taken off the market and the demand doesn't subside, well, that pushes prices higher. I'll use a basketball card, for example, a Michael Jordan rookie card. Do you think that there'll be more demand time in 5, 10 years? And the supply that's been bought from the market, do you see more of them coming to the market because all of a sudden the people who own the Michael Jordan rookie cards are going to want to sell it for some reason? I don't think so. I might be wrong. Think he's Michael Jordan. I think as it gets older and older, the value of the card probably goes up. Now, just like housing and just like the equities market and just like anything else, it has ups and downs. And if you look at a chart of what it's done, it shot up, it got way too expensive, and then it came back down. Maybe it's a good investment now, but I think if you go out 20, 30, 40 years, as long as cards are still collectible, well, Michael Jordan, I mean, to me, that's like Babe Ruth or Wayne Gretzky or any of the great ones. Just one of those names that our grandkids probably will have heard of. Last week's price action in the equities market looked kind of scary. Again, I think that was primarily due to the war that's going on in the Middle East. I could see it being pointed to what's going on with the Fed and everything else. But I think that you just have to stay calm and weather through those things. I don't see that as becoming this opportunity to get out, try to buy it when it goes lower, to get back in. I don't think that really generally works out the way that people think. And in the long run, the markets tend to go higher. So if you miss that opportunity, do you end up in a position where you've just cashed out of your equities and now you're sitting on the sidelines waiting for that next pullback that, I don't know, might be out 10, 20 years. Maybe it's out a year and you get that opportunity. But if it doesn't happen and you're sitting on the sidelines for 12 or 15 years, do you end up in a better position? Now, maybe you're happy getting 5% in a high yield savings account or buying some CDs or something that can pay you that percentage. But me personally, I want to have a little risk on the table and I want to stay invested. I want to own properties. I want to own equities. I want to have some gold and silver, but I try not to have too much of that because I think that's more panic stuff. I don't see it as where I really want to have the bulk of the investments. Now, for those of you who want to follow my lead, I think that's great. Or if you want to have the information, but please understand again, I'm not a financial advisor. This is just my experience from being fortunate over the past, 30 years of investing. I find if I invest in what I think are the best things, and I try to narrow it down, especially the older I get, and not be spread out into too many things. I really want to own what I think are the best things. You might have seen in my other video, I really think that Microsoft and Meta and Google and Amazon, I think these are the best things, and this is where I want to be. If I expand into like oil and gas, I like Exxon and Chevron. I think they're the best things to be in those spaces. And then I'll go into Starbucks. I think it's probably one of the best spaces to be in terms of food and beverage. You know, I just think if I stick with the best of the best, they'll perform great. Now, don't get me wrong, like, I don't know how many of you are familiar with Portillo's, but I think they're a great restaurant brand. And maybe I'll hit it big because they'll expand at a great rate and they'll do really well. I just don't know that I want those types of risks in my portfolio because maybe they don't. It's a bigger gamble. Maybe it pays, maybe it doesn't. Now, if you know something about the field that you're in and you know about great companies, by all means, invest in what you know about. Don't listen to me. Just don't see the little ups and downs as the market as these opportunities to get out to buy it back when it's safer or when you think the prices will be at a better price. I find if you wait until things are quote unquote safer, the odds are that the prices are higher. The other thing is life can't always be just about investing. I know that's what I talk about on the channel, but you need to take some time to enjoy some time with friends. A week or two ago, we did my smoker in the back. I got a barbecue over there. We smoked some ribs and did some other stuff. Maybe I'll put a picture of the ribs because I was proud of them. But you have to take time to have mental breaks and hang out with friends and give time to yourself. We also donate our time. I'll give a shout out. We do a little bit with this thing called Miracle League. They do sporting events for underprivileged and people with disabilities. But it's incredible. Go out like right now is baseball season, and don't get me wrong, it's more like a soft wiffle ball and plastic light bats, and they go out and half the people aren't even sure which direction first base is, but you have such a nice time hanging out with the people and making new friends, and they're so appreciative and you get hugs from all the kids. It's super cool, and it makes you appreciate the things that we have and what's important in life. So try to take some time to help others, try to take some time to spend with friends, and then pay attention to your finances and save as much as you can. The best advice I can give anybody is start young and save as much as possible. Your older self will really appreciate it because at some point it'll be tougher to work. You won't have the patience. I mean, I'm pretty young still. I'm 52 years old, but I don't know that I could spend 80 hours a week working the way I used to. I had a restaurant for some time, and part of the reason I got out of the restaurant business and back into finance is I was worried about getting into my 60s and 70s and having to be on my feet all day, or possibly having to cover a spot in the kitchen if somebody didn't show up. Those would have been difficult and hard to do as I got older. Now, I like to keep busy, which is part of the YouTube channel and everything else. And I wanted to have something that I could do if I wanted to. So I got back into finance, which is why I did the mortgage stuff. And to me, that fits much better because as I get older, I can manage the time and work as much or as little as I want. And I'm not going to be on my feet all day if somebody doesn't show up to work. Now I've all the things about my head that go crazy with AI and where I picture the industry going in the future. Because to be fair, with my trading career, part of the only reason I got out of the commodities business is technology change and the industry changed. When I started trading, it was great. The next thing they did is they put these little earpieces where you could hear the other markets trading that we would move according to. So some of the people had earpieces. And then the next step, as computers started coming around, is people started having handhelds that they were holding in the computer. Now, most of us that have been trading for some time, I don't want to say we would, but yeah, we were making fun of it a little bit because what you would notice is the bid and offer, the spread in the pit was better than the one on the computer. So you sat there thinking, why would anybody want to trade on the computer when the market isn't as good as the one in the pit? Well, slowly over time, that started to change. And slowly, meaning it only took a couple of years, but it felt slow till eventually the markets were pretty similar. And customers liked trading online because they could direct their own trade. Previously, they had to call somebody who then called the floor, who then put the order into the pit, and they're sitting there waiting, trying to get the quotes, even if they have access like that, which most people don't, and they're just blind, letting the markets move however they move, versus the computer that shows them the market and they can do it themselves. Well, the next thing you know, the markets on the computer were even better than the ones in the pit, and slowly the volume went from the pit to the computer, and now it doesn't even really exist. When I watch CNBC and they actually show my pit from time to time, that's a video from 20 some odd years ago. I recognize the people in the video, and I think it's funny how they're playing it, implying that that's a live thing going on at the Chicago Mercantile Exchange. But it's just an old video clip, and really it's got one of the traders who worked for the bank. His name was Bryce, right there in the middle of it, and it's kind of funny that that's from that long ago. But what I'm getting at is the technology changed, which changed the industry. And I could see that happening with the mortgage industry and other things. And it's interesting. I talk about in some of the other videos the lawsuit in the real estate industry. Now, we'll see how it plays out. I don't think it's going to be as big a deal as some of those videos have made it out to be. I think it's really just going to have the buyer's agents kind of talk their clients through the process a little bit better. And it actually makes a form that's been around for a long time now required, which I think could make it easier for the buyer's agents because it makes the buyer actually commit to them that they're not going to run around and work with 10 different realtors, which was rather frustrating for some of the agents. Also, I'll get back to the real point of that was I didn't stay in the restaurant business because I thought it would be too physically demanding on my body. Whereas if I could go back into something else that went back to office type of work, I can do that as long as I want to, as long as the job stays around. Hopefully, the technology doesn't change it so much that I don't have the option because it's nice for me to have something to do for work at this point. Anyway, thanks so much if you've made it this long. Don't forget again, subscribe, thumbs up, like, make some comments. Do your best, keep saving and investing and whatever it is that you see as a good investment. Have a great weekend. I'll talk to you guys tomorrow and see how the markets open up.